Okay, man, it's Thursday morning. I played that little intro to give folks a little more time to get in because this show is going to be packed with information. I spent hours analyzing everything, so you don't have to. And wow, look at this. First of all, it's Thursday morning, July 20th. We have a bunch of things going on you need to be aware of. First of all, we have REL conference call at 10 a.m. Now, I'm short REL. We'll get into it in just a second. All right. Then we have 12 p.m. Rexman trades. Be there. That's the best show in all of financial media, in my opinion. All right. And then we have a 1 p.m. update open to the world. There's a link down here. Please help us spread the word and grow our community at storytrading.com/YouTube. So lots of earnings last night. First, let's just let you know that CLBR, which we gave you $10.40, is now trading. First day of trading, PSQH. Public Square. They're ringing the opening bell at the New York Stock Exchange. It hit an early pre-market high of $17.50. You can see it's up 15% here at $16. I got to say that early pre-market high is a resistance level, $17.50. I wouldn't be surprised if it retests it during the day. But look, I plan to be completely out today by the end of the day. Initially, I was saying maybe be completely out at 10 a.m. Maybe we'll be initially out like sometime in pre-market towards 10 a.m. But this thing is so volatile. It's so volatile. There's just crazy opportunities here to trade this. So I think we might stick around on this one. And we do have some put protection to the downside. And that's what's giving us a little bit more confidence to be able to trade this during the day. Thank you, Chris Tuttle, for that idea. So we'll see how that works out. So far, it's been a very profitable trade. Hope some of you got that. Now, we had a bunch of earnings reports. Yes, last night was Tesla, Netflix, IBM, REL, and we'll get to that. But what stuck out for me that's at the top of the list right now is TSM. TSM is a Taiwan semi. Look, this is a big, important company, $500 billion. And the headlines I saw look like a miss in terms of the guidance. The guidance was lower than expected. You can see it positive. It says profit topped expectations, but gross margin contracted and is expected to weaken further. Let's see if we have anything on the revenue miss that I saw. Reporting worse than expected second quarter results we have here. Third quarter revenue to rise on quarter. Let's see what else we have. Okay, let's look at the numbers. Here we go. Q3 revenue of, this is what I saw that caused me to actually short TSM early this morning. Q3 revenue coming in, like when stocks have exploded, there's no room for this. You can't miss, even by small amounts. So 16.7 to 17.5 billion. Take the midpoint of that. That's 17.1 billion versus 17.7 billion. That's a pretty big miss percentage-wise. And then gross margin, I don't know how that impacts earnings though, right? So we see here the earnings beat 114 versus 108. I don't see earnings guidance for next quarter. I just see that they missed on revenue. But up here, we also saw that they said gross margins worse than expected. So if margins are worse than expected and you miss revenue by $600 million, that's not good. And, you know, at this point, I'm looking for any trigger, any catalyst that can spark a market correction because we've been up so much. Now, TSM has not necessarily been, well, I mean, did it have moved from 85 to 110? But this whole sector, the semiconductors, that has exploded. So listen, we are long a bunch of like NVIDIA, probably, I don't know if we have some Microsoft, I'm not sure, but we have a bunch of big cap tech. I think we have a little IBM, Google. We have like exposure to this, like all these big cap techs that exploded. So what I did, I immediately shorted as a hedge. I shorted TSM and I also shorted SOXL. And I'm not sure I recommend others do that because it's triple levered SOXL to the upside. So we're up on this trade. You can see it's been down all morning. And we're up on TSM. Now, TSM technical support here is at 98.50. Okay, that's the low-hanging fruit. 50 DMA. It's also candle support right here, perfectly aligned. You got double support at 98.50. That's the low-hanging fruit. That's the layup on the short from like that 100. It was about 150 when I shorted 100.50. So it was like a $2 move to the downside. A little bit of a hedge against our long-term positions. You can't really do technical analysis on SOXL. So I'm really looking at this as more as a trigger or a catalyst to spark a downward, a change in direction, right? To spark a correction. If we look at NASDAQ, so if you go to QQQ, what do we have here? QQQ, maybe this is what it takes to get the NASDAQ to move towards the 20 DMA. All right. So if you have that much room to the downside, and I'm in some big cap mega techs, so that's why I took this short on TSM and SOXL. And look at PSQH heading towards that 1750. It looks like the pre-market high is actually 1780. So maybe that's your resistance again, 1780. Oh, no, it just hit 1780. Wow. I guess while I was talking, I missed it. So it did actually challenge and slightly beat that early morning pre-market high. Wow, this is fun. All right. Hopefully my partner's doing some good trading on that this morning with some limit orders. It's great. All right, now let's get into some of these. I wanted to mention NVIDIA. NVIDIA, can this buck the market trend? NVIDIA had 3 price target upgrades today. 3. I mean, they just don't stop every single day. Here we have 600, 575, and 570 all today. It seems like every day there's 2 or 3 analysts coming in the upper 500s to the 600s. So can this shrug off what's going on with TSM and keep heading higher? It's a possibility. That's why we didn't sell NVIDIA this morning on this TSM news. We just instead shorted TSM, and that's looking great. TSM heading towards their target of 98.50. We just shorted TSM as a hedge against NVIDIA. A lot to cover, man. What should I do first? The big cap tech, Tesla, Netflix, IBM, or REL? All right, we got to do REL first. All right, I know like a lot of you probably don't care about REL, especially if you're new to the community. You're more interested in the big caps, but REL has been, it was a stock that I was bullish on. I actually presented it. Someone from our community introduced it to us, and I loved it. I think I was even on Benzinga on this. Like I did a whole, there's several YouTube videos on this. So I've been in this for a couple years, and it was fruitful at the beginning, right? We made some money, but it hasn't been so fruitful in the last year or so. So this is a position I've had in my IRA. I had it for my kids. We had it for a hedge fund. And last night, I sold everything in after hours. Not only did we sell everything, I went short, and we added to our short this morning. So look, here, let's see. If we look at the numbers, okay, the numbers were a miss. 11 cents, misses 19 cents. Okay, so a few ways to look at this in terms of, first, man, where do I start? Okay, that's the numbers. So 11 cent misses 19 cents, right? And if you go look at the press release, you see there's like not really great commentary on anything. There's nothing to balance that out. Okay, like but this sector is growing really fast, or but X, Y, and Z, like we're really excited about what's coming this quarter. There was like nothing like that. It was just a bad miss, and revenue missed by 2 or 3 million. Like, so I'll get to the fundamental calculation in a second, right? To me, it's like the story changed. I was in this because I was looking for explosive growth in the green energy sector to make up for any weakness anywhere else in the business. And we didn't. There was growth in green energy, but not enough to make up for it. Not enough positive commentary to make up for it. So to me, this is basically the story changed. I want to get out. I just want to get out, like at any price, immediately when the story changes for me. Okay. So I did that. I got out. Then we look at the technicals. Now, technicals, unfortunately for REL, it's in this no man's land between 2 key moving averages, and you have this strong technical support here at 1372, this candle right here. Okay, you can see, but back here is also support, like in the 13s, but 1372. You break 1372, this is your next support, the 200-week moving average at $10.91. Now, let's go back and try to triangulate that with fundamentals and valuation. This is what I like to do at story trading, look at things from a multidisciplinary approach. Okay, you know what we very often do with earnings? We take the magnitude of the miss or the magnitude of the beat, and we'll do that again. We'll show you what we did with American Airlines and Delta this morning as well. No, it was Delta and United Airlines, okay? But we do this exercise very often. We'll say, okay, 8 cents was the miss, right? They missed by 8 cents. They were expecting 19 cents. So let's do this for a second. So 8 divided by 19, they missed by 42%. Okay, now, the best thing to do is full year guide, but they didn't give us full year guide. So this is all we have to go on. So one way to do the math is like, wow, well, maybe the stock, maybe, and I'm not saying it should, but because I'm going to show you other methods to do valuation in a second. But maybe the stock should re-rate down 42% based on the premise that markets are efficient. Yesterday's price was the correct price. Today you have new information. The delta information will cause a delta in price rapidly in an efficient market. So we should be down 42%. The close yesterday was 15.55. So let's see what 42% of 15.55 is. Down 42%. So plus 1 times 15.55, $9. Okay. So if you do it that way, you get to $9. Now, $9 is below the 200-week moving average, not beyond the realm of possibility. Let's look at another way to value this. If we're at Q4 EPS 11 cents, what if we annualize 11 cents and take it to 44 cents? Okay. Look, maybe that's not the best way to do it. We had Chris Tuttle on yesterday, and we talked about what are their earnings, right, for the year. Even with this miss, he was on the Zoom last night. We did a Zoom at 4 p.m. where we're analyzing this live. And it's like, even with this miss, because there's a lot of one-time items and stuff that go in this EPS, so I'm going to trust him rather than 44 cents, because it gets really bad. If you do 44 cents EPS, actually, if you do like a 20 PE on 44 cents, you get to like 880, which is close to the 9. But he's telling me, and I trust him, that it's more like $1 run rate still, even with this miss. Okay, but even at $1 run rate, what kind of PE does a stock get like this that's not growing? Year-over-year drop in revenue, year-over-year drop in earnings, like nothing positive commentary. What kind of PE should it get? And in my experience, stocks like this at 10 PE is fair. And it can even go below a 10, right? So 10 is fair. So we just did a calculation that said maybe 9, another calculation of a 10 PE, which gets it to 10. And then we look at this 200-week moving average, which is 11, right? So all of these numbers, it's like I'm trying to calculate many different ways, and they all come to the same conclusion that we can break this 1372 and head to about 11 today. Now, caveats. One big major caveat. The conference call didn't happen yet. It's at 10 a.m., okay? So I'm going to try to tune in myself and see if they say anything. There is like, what could possibly change this? I think the one thing that could change this is if they come and say, you know what, we're going to start looking into divesting ourselves away from the healthcare business, either selling it or shutting it down. If that happens, then, you know, EPS can maybe double from $1 to $2. And then you throw, you know, a 10 or more P on it, then you're talking about a $20 stock. Okay. So that's the risk to the upside if they say something like that on the conference call. Absent of that, between now and 10 a.m., I think this thing's going to have downward pressure. So I'm going to listen to that at 10 and see what they say if there's any surprises for us. But for right now, this is my top pick of the day, probably. Okay. Rel short is my top pick for the day as we continue to look at PSQH, just killing it. So let's move on. Rel short at, well, you know, PSQ is a trade at this point. I mean, as a top pick at 1050, it was it was an A idea at 1050. All right. So that's the story on Rel. All right. So TSM short, Rel short, SOXL short. Nvidia, we're still long with all that. Now let's get into Tesla. And another thing I just want to mention with Rel. Listen, people don't say this enough. Other influencers or people who have shows or whatever, like everything comes down to allocation, proper allocation. All right. I'm going to be wrong on a percentage of plays. You're going to be wrong. You know what? Like, actually, I don't know that any one person is better than the other in terms of making predictions. I think I do a good job here with predictions. But to be successful in the stock market, you have to allocate the proper size to it, because you are going to be wrong a percentage of time. I could be completely wrong on this. This thing can go to $17 today, and then maybe I missed something, right? So you have to, when you're doing these trades, you have to make sure you have the proper allocation, okay? I can't go into, you know, the whole spiel about how to do that right now, but that's something you got to figure out for yourself. Look at PSQH. Back at that pre-market level, 1750. Amazing. Yosef, I hope you're killing it trading this. I know you love this kind of volatility. I don't know how we're doing, but I hope we're doing great. Okay, so let's move on down to Tesla, Netflix, IBM, UAL, AEL earnings. Okay. I listened to the full conference call on Tesla and listened to some commentary afterwards. I actually really like this conference call for the long term. There were a few really positive things out of the Tesla call. Okay. One of them was that they are now looking at licensing out FSD, full automated drive, whatever that stands for, but the automated driving software. They're looking to license that out, full self-drive, to other OEMs. Okay, that is huge. That's big TAM, high margin TAM, very nice. Next big thing, the margins in their energy business now exceed the margins in their auto business. No one's ever expected that, and that's a huge TAM. Very, very great news. And the third thing, which was important, which was seen as a negative initially, but I view it as a positive. Production will be slightly down in the third quarter because of factory pauses, because of factory upgrades. Why do you think they're doing factory upgrades? Usually because they're putting in systems that's going to make them more efficient and enable them to drop their prices more, become more competitive, increase their margins. So that's a positive for the long term. I saw nothing but positives for the long term here on Tesla. You have 20 DMA support right here at 270. This is a long-term pick for me and for us. It's in my IRA. It's in our hedge fund as a long-term pick. So I'm not really making any trades on this, but I was really, really pleased with the report and the direction Elon Musk is taking this company in. I do think one day he's probably right. I think this will be a good chance of being the most valuable company in the world. Apple's at 3 trillion. Tesla's at 1 trillion. So, with inflation, he's telling us 5 to 10 bagger. Kathy Woods is telling us numbers like that. I'm tending to believe those predictions right now on Tesla. Really bullish Tesla. All right, Netflix had earnings. It was mixed. I think it was the top line miss, the bottom line beat. The guidance for the bottom line was higher than expected. If you put it all together, the numbers weren't that bad, and I think it's going to hold the 20 DMA. That's my best guess. It's going to hold the 20 DMA. But I don't love this stock for the long term. I don't love it because, there's so much competition in this space, much more than Tesla has. Okay. A lot of competition in space. I don't know what's going to happen in 5 or 10 years. So I don't love this stock, but I think there's a great chance it's going to hold that 20 DMA. If you do the math on the earnings and everything, yeah, it's a little bit rich, like a 30 PE or 35 PE, something like that, but it's not terrible. Okay. Especially if we're getting back into a bull market with expectations of lower interest rates, you can justify a 36 PE for a high growth company. So I'm thinking this 20 DMA is going to hold. But given our other focuses, I'm not going to play with that today. IBM also had mixed earnings. IBM, it was a similar situation. It was a top line missed, I believe, for the quarter. The earnings beat, so mixed results. But they did talk about, and they played up their AI offering, Watson AI, which had double-digit. The thing with IBM, the PE is very low. It's like 15. It says 62 here, but that's not true. If you annualize what they've been doing quarterly, there's probably one-time items in there or something. I don't know what that's 62, but really the PE is about 15. So the PE of 15, I mean, that's a cheap mega cap company. The reason it's cheap is because their overall revenue growth year over year has been about 5%. But their Red Hat segment and their AI segment with Watson is growing at 10 to 12%. This past quarter was 10 to 12% year over year. And they had very positive commentary on the demand for the Watson AI product going forward. So I think this is a fairly valued or cheap mega cap tech stock, which has optionality to the optionality upside, depending on if they have further momentum with their AI. And I believe they said later this month, they're going to have more updates and upgrades on their products, their AI Watson product. So, again, not something I'm chopping at the bit to buy today at all, okay? But this is something, if you want to have an allocation, because of all the big cap growth that's been happening, that seems like a fair place to have some money, along with Amazon. I think Amazon and IBM could be sleepers because they haven't moved as much compared to the other big cap tech in terms of their AI upside optionality, and they both do have AI upside optionality. So, that's the story with that. Now we have two airlines that had news, UAL and AAL. On the surface, they both look like huge beats. All right. It's 919. I'm not going to delve deep into the numbers. I'll just jump to the conclusion. They both had what looked like huge beats and raises, beat and raise. But UAL is up 1.5%. AAL is down 2.6%. What's going on? Why? Okay. The thing that's most important, the market moves on guidance for the year. Or if you're deep into the year, guidance for the following year. It doesn't matter what just happened. It matters what's happening going forward. So UAL, if you back out the beat for the current quarter, and then you say, okay, well, now what are they guiding for? Meaning you back out. Maybe the magnitude, they give you a certain number for guidance for the second half of the year, right? But then you have to back out the magnitude of the beat from Q2, take that out of the full year guide, right? And now you can do an apples to apples comparison on the second half of the year compared to analyst estimates. So if you do that on UAL, it was actually only a 7% guide because without that, it was something like 18%, right? And the stock was up like 2-3%. So it's a 7%. Traditionally, we would say, okay, 7% beat. This is a buy here at 1.5%. The stock should re-rate up 7% today. But I'm not going to do that. I'm not going to make this prediction because I was just talking yesterday about how frustrated I'm not trading any of these, but just looking from a distance is just very frustrating. If you were in these airline stocks, how they don't react well to earnings. They haven't been moving based on the magnitude of their beats at all. And they're very undervalued, very low PEs here. UAL is a 9 PE, American Airlines like a 5 or 6 PE. And, in talking it through with some colleagues here, kind of made the connection that this is really this really trades like an energy company, because energy is such a big input into their business, is a big cost, and also energy prices really impact the demand for airlines. So, if you know anything about energy stocks, they're really hard to trade, really hard to predict what the PE should be. I mean, these energy stocks, I don't trade energy stocks at all anymore, because, especially if you're like a value investor, you can't make any sense out of it. It's just basically, it's very arbitrary. It seems like, what's the PE of this year? Like, everyone says, okay, the PE for energy stocks should be 5 this year. Why? I don't know, because of some thesis that somewhere down the line, I guess the market is still thinking there's going to be a severe recession, even though we see no signs of that. So, oh yeah, there's going to be some sort of severe recession and energy is going to go down. So let's make all energy and energy related stocks have a PE of 5. So I gave up trading in energy stocks, and this is why I'm not, and now I see the connection after talking to colleagues that basically airlines trade like energy stocks with these very low PEs and these expectations, which I don't know where they come from. Some sort of big people with a lot of money, with a lot of control over the market, making their assessments that oil is going to really drop, probably because of still some sort of expectation of recession. Therefore, we're not going to reward UAL with a 7% re-rating today. Now, AAL also beat and raised. And if you back out the magnitude of the beat in Q2, you back it out from the second half of the year, compared to analysts, it's actually only a 1% beat. The headline looked huge. It looked like, oh my gosh, like they were raising by how much? Look at this. It says 2023 adjusted EPS outlook, 3 to 375 from 250 to 350. Like, that's huge. You're going from $3 midpoint to like 333 midpoint. Was it huge? Okay, it's not even big as that. I saw the 250 to 375, but if you take the midpoints, it's still big. It's like a 12% increase at the midpoints. Okay, but if again you do the math, you saw the magnitude of the beat was pretty good here. It was 192 beat 158. You got to subtract that from their guide from the midpoint guide, and then you find out they're guiding only for 1%. They're beating analysts on the second half of the year on earnings by only 1%. That's not a stock I'd buy. I'm not even going to say, that might re-rate 1%, even if it didn't have the energy issues we talked about. Like, I'm interested in buying stocks for a re-rating if they're beating analyst estimates for the remainder of the year, or the full year, by like 10, 15, 20%, maybe 5, 6, 7%. Air was like 7% and it exploded, but not 1%. So nothing really of note there, nothing really to trade with all these earnings this morning. So I will note XXII has had relative strength end of the day yesterday. It's looking good here. Overstock a little bit of relative strength this morning, but look, it looks like a market correction, man. It looks like a market correction right now, and that's why I'm really happy that I shorted SOXL and TSM as a hedge. Other TSM hit our target, okay, as we're doing this show. That's the initial target, 98.50, okay, 98.50 right there at the, now let's look for secondary targets, 50 DMA. We hit our first target. I'd probably be all out here at the first target. But like, if you go to the weekly 20 DMA, maybe it makes a further move to 94.76. I want to say that we should still have some short exposure here because we're so long on NVIDIA and all these other big cap tech. So despite that this hit our first target, maybe we reduce our position. Maybe you reduce your position if you're doing this. Hit the first target. Maybe we have a lower, and this is pre-market. Usually these big cap techs, whatever you see in pre-market, usually it just accelerates in that same direction at 9:30 a.m. That's why with these big caps, a lot of times they're great options trades too, because even at 9:30 a.m., you still have this direction all day long. So possible here, we hit our first target. We're going to reduce, but I still like having exposure short on TSM and SOXL as a hedge against big cap tech today. Looks like. So, all right, backing all out, what are our top picks today? What are the top things we're looking at? You know what? I think this is the right order. The top picks are let's trade PSQH, let's short REL, listen at 10 a.m., see what happens at 10 a.m. in case they throw a wrench in there. And then we're shorting TSM and SOXL as a hedge. That's all I see for this morning. All right. And I think I wouldn't be surprised if XXII outperforms. It's just been beaten down so much. They've been on a PR tear. Let's move this up to the top after SOXL short. And so it's a penny stock. Mind your allocation. Got to have the correct allocation. I gave this a 294 resistance. If it breaks 294, it could make a move towards $4. This is dropping maybe 379, 380. Okay, maybe 294, and then a whole buck after that is possible in XXII. And man, I think that's enough for the day. I could keep on going, but you know what? That was a lot of value I gave you guys today. I got to be honest. All right. So We are going to see you at 12 p.m. for the Rexman show. Spread the word, storytrading.com/YouTube for the 1 p.m. show. And I'll try to update you guys if I can, if I remember, after the 10 a.m. REL conference call, if there's anything that changes the short thesis on REL for today. And remember, I could be wrong. Thank you for joining, guys. Have a great day.